What's up, everybody? This is Sunko, the Korean bro, and today is March 6th, 2022, and tonight is a Sunday night in Korea, and in Korea, mm, uh, what's been up with Korea? Sooner or later, president will be elected. New president will be elected, and because of that, um, vote day is coming. Uh, Next Wednesday is vote day, and on next Wednesday I'll have my work day off. Uh, it's That's new news. Other than that, nothing's new. Uh, what's up with my stock? I invested my money into it last week, right? And at that time, I was hoping that from now on, it's gonna go up. But then now what I'm looking at is surprising. Probably because of crisis between Ukraine and Russia and uh rate high rates. Oh, hmm, uh, stock uh mm, is a downward trend, not upward trend. So uh, the moment that I invested money into it, most of the stock uh, went down compared to the point where I invested my money. So I'm gonna go over the news and mm, analyze what's happening. Uh, in the short term, I'll have my I'm gonna have negative results, but then in the long term, I expect that I'll have a positive results. So I'm not gonna have my hopes up in 1 month or 2 months or so, but like I'll have to look at it in like a year or 5 year, that kind of like year span, not like a month span. You know what I mean? So it's a time where I have to control my emotion so that even if I'm really down, I have to pull myself together and I have to stop myself from selling the ones that I invested my money on. So, mm, alrighty. So let's look at what we have tonight. First. Uh, in front of me, there's a paper, and in this paper, I got a list of companies that I've spent my money on, and after reading through articles, I'm gonna go one by one and see what's been up with these companies and analyze the trend. Uh, let's look at one as an example. Okay, Mercado Libre. It's down by 3% on Friday night, I assume. Harding loan over. We took advantage to acquire shares of Mercado Libre. 7 favorite fintech stocks to buy after the correction. Shopify suffers. Uh, let's see what it says about uh the stock. Okay. C Limited is included here. At C, Global E-commerce, Market Libre. Hmm. Mali. Marco Libre is widely regarded as the Amazon of Latin America. Okay. Hmm. Headquartered in Argentina, it runs the largest e-commerce marketplace in the region. The group connects a network of more than 130 million active users across 18 countries. Hmm. In 2020, e-commerce sales in Latin America grew 37% to $85 billion, making the region the fastest growing e-commerce market globally. According to America's Market Intelligence, e-commerce purchases in Latin America are expected to grow at a 29% compound annual growth rate. Mercado Libre recently made strategic investments in the 2TM Group and Paxos, revealing its increasing focus on crypto assets and blockchain technology. 2TM Group is the parent company of Mercado Bitcoin. Okay, Mercado Libre recently made strategic investments in the 2TM Group and Paxos. Okay, Mercado Libre. What is it? 2TM Group and Paxos marketing made strategic investments, revealing its hmm, increasing focus on crypto assets and blockchain technology. 2TM Group is the parent company of Mercado Bitcoin, while Paxos is a blockchain company. Paxos blockchain company. It offers crypto investment. Management announced Q3 2021 metrics on November 4th that net revenue increased 73% to $1.9 billion. Net income came in at $59.2 million or $1.92 per diluted share, compared to net income of $50 million or 28 cents per diluted share. In the prior year quarter, cash and equivalents ended the period at $1.4 billion. Mali stock hit a new 52-week low on February 24th, okay? Down more than 50% from its 2021 high. It hovers around $1,135, down 16% year to date. Shares to like a bargain, just 8 times trailing sales. Lower than where it was 5 years ago. The 12-month median price forecast for Mercado Libre stock is $16,600. So Latin Amazon of Latin America. Hmm. Okay. Stuff like this. Tonight we look at Mercado Libre as one of the examples. Um, of course, I'm gonna go over the articles first, but then if I'm running out of articles, then I'm gonna go one by one, the ones that I invested my money in, and then see what's really happening with these companies. That's what I'm about to do. Because, keep focusing on the ones that I've invested in is really important. Otherwise, I would possibly um lose my confidence and lose my money at the same time, so it's not good. So anyway, what do we have tonight? Moody's cuts Russia rating to core on rising default risk. How companies can put an end to Putin. Hmm. The worst is yet to come for stock market, so it's a swift snapback. Okay, it's getting harder to trade Russian stock. What to know? Kathy will watch Art Next Gen Internet Bias Cybersecurity sells Splunk. Two stocks are ready to rip 50% higher. Uh, Ending a hard week with a price target cut. TV, internet, closed with worst week since March 2020, and euro plunges to two-year low as Russia-Ukraine war worries build. Stagflation is here. Is recession next? Real wages hold the key. Why war and sanctions are good for Bitcoin. High-yielding stocks are often too good to be true, not these. How to pick the best dividend stocks right now. These money and investing tips can help you thrive and survive in this unpredictable market. History suggests all shock raises probability of US recession. Cloud stocks have become a haven in tech. Here are four clear winners. The coast of each trucking action, five best Chinese stocks to buy and watch. Cryptocurrency in time of war. I don't know how long this war is going to last, but what we know is that the value of crypto goes up when war occurs because people feel on the instability is what people feel, and when that happens, people are tended to invest money into safer one, hmm, not risky one. Is Amazon stock a buy after a positive quarterly earnings report? Broadcom stock jumps after chipmaker beats Wall Street estimates. Uh, these 10 dividend paying stocks show why cash isn't trash in this brutal market. The worst is yet to come for Russia's economy. 50-50 odds on the Russian bond defaults. US stocks Wall Street drops as Ukraine wars eclipse strong jobs data. Nuclear apocalypse, but keeps buying shares, says investment firm. Morgan Stanley hires $750 million advisory duo from JP Morgan. Microsoft makes a big move into AI-driven healthcare. Stock markets fall again. Okay. Barry Gold stocks relative strength rating shines brighter. War in Ukraine puts pressure on Eastern Europe. Bank 2 prop up sinking currency. Okay, this is about it. Why Alibaba is the cheapest company in the world outside Russia. Okay, this is about it. Okay, let's look at it. How companies can put an end to Putin. Of all the headlines this week on Russia's invasion of Ukraine, one story in particular, written by more colleague Brazil, Brian Sozi, caught my eye. Russia and Ukraine war is a financial war now. Yes, that's right. Financial sanction is being done by the states, especially. The line comes from Dutch bank strategist Jim Reed, who was making the point that the world's economies are doing battle too. Before I get into this financial war, I should acknowledge that for the Ukrainians who are fighting and dying for their country, this is very much a real war. Some Ukrainians are angry that some Ukrainians are angry that its allies are not sending troops to fight. This is what happens when a megalomaniac armed with nuclear weapons has the rest of the world over a barrel. Putin still has a few friends in Belarus, Myanmar, North Korea, Venezuela, Cuba, all support Russia, and then, of course, there's Russia's greatest ally, China, which may be experiencing a bit of buyer's remorse right now. India, Pakistan, Brazil sit on defense. Besides those few large players and the outliers, the rest of the world is united against Putin and is grasping neo-Stalinism. I was surprised at the sheer volume of weaponry being shipped to Ukraine from NATO, the US, and other countries. That plus the amount of humanitarian aid is significant and surely speaks to why the Ukraine are hanging in there. So while Ukraine is rapidly becoming the world's most militarized zone, we all fear it's only a matter of time before the Russians triumph. Hmm. And it goes on and on and on. What's the summary? What's the point? Thanks in part to financial war back then, the private sector helped and apartheid. Let's hope it can somehow do the same to end Putin. Hmm. The worst is yet to come for the stock market, so it's a swift snapback. If the US economy proves isn't going anywhere, it's getting harder to trade Russian stocks. What to know? Nearly worthless penny stocks, once worth billions of dollars. Once billion of dollars. Russia's largest companies. What are Russia's largest companies? Once worth billions of dollars. It may look like an attractive opportunity, but for the most part, investors can't even chance buying the deal with exposure to the sinking Russian market. When they can, it remains a chaotic and risky endeavor. Hmm. Kathy will watch our next gen internet by cybersecurity sales Splunk. As a measure, Kathy will continue to broadly pursue beleaguer the technology stocks. Bought a few prominent software companies. Prominent software companies. What are prominent investment? Star Kathy would bought into a couple of cybersecurity firms on behalf of our next generation internet ETF. What are these? CrowdStrike, okay. Okta, okay. Okta is one of them. Hmm. Okay, there we have Okta. It's a $5, 5.5% down. Okta, 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 Okta. It's on my watch list too. Okay, so also for she bought nearly UiPath. Hmm. Hmm. Path. Hmm. She continues to pursue her strategy of buying beaten down technology stocks. In many cases, it's stocks she already owns. Our exchange traded funds bought shares of online video game platform Roblox, video streaming service Roku, and video conference service Zoom Video Communication. Frontier Communication. Okay. JP Morgan, two stocks that are ready to reap 50% higher. What can we make of the headlines today, and how will the stock market react? These are the questions that every investor must answer in order to make a rational portfolio allocation. But the answers are simply less than clear. Geopolitical tensions, rising inflation, spiking oil prices, a probable reversal of Federal Reserve policy going forward. These are the main headlines blowing right now. Okay, spiking oil prices. Spiking oil prices. And we have rising inflation and geopolitical tensions. Okay. Probable reversal of Federal Reserve policy going forward. Covering the scene for JP Morgan, Chief Global Market Strategist Marko Kalanovic has outlined 6 reasons why the worst might be behind us. The announced sanctions, though severe, appear to have limited impact on economic growth. Sanctions. Okay. Energy price increases have been contained so far, likely tempered by geopolitical risk. The conflict is unlikely to spread to other Eastern European countries that are NATO members. U.S. tech approached oversold conditions. The rise in oil prices should create some supportive flows for equities. Against this backdrop, the analysts at JP Morgan have been seeking out stocks that are poised to push ahead in the current environment. They have pinpointed two which they see generating returns of at least 50% over the next 12 months. We ran both names through TipRanks database to see what other Wall Street analysts have to say about them. Frontier Communication, we have what do we have? Equi Inc. Hmm. Let's look at this one first. Frontier Communication, FYBR. Hmm. We'll start with Frontier Communication, an American telecom company. This full-service telecom operator offers customers local and long-distance telephone services, plus broadband internet, digital television, and computer technical support. In short, a full range of telecom services. Frontier has a large presence in less served rural areas, but has also been expanding into urban metro markets. The company currently operates in 25 states. Hmm. And boasts over 3.1 million total customers, a number that includes nearly 2.8 million broadband internet customers. Has been trading on the Nasdaq exchange since last year, when the company exited bankruptcy proceedings successfully and returned to the public markets. The FYBR ticker started trading on May 4th, 2021 and has an high volatility since that time. Okay. The rise of online streaming has forever altered the way that we watch TV. Consumers can pursue the offerings of the large streaming networks and buy access to the shows they want when they want. It's no wonder that the model has so rapidly become so successful. But looking at the streaming market from a Western perspective, we can't lose sight of the fact that it's actually China, which makes it the world's largest single online market, and that includes China's online streaming services. Okay, IQ. Wow, 11% down. But looking at the streaming market from a Western perspective, we can lose sight of the fact that it's actually China, which makes up the world's largest single online market. It is China's largest streaming service, leading the market in country with both a voracious appetite for online content and over 800 million connected internet users. Mhm. The company offers a wide range of original content, along with a library of existing material, including both user generated content and professionally produced offerings. Currently leads its market, the company is giving investors some complex signals. For 2021 as a whole, revenue came in at $4.8 billion, up a modest 3% from 2020. Looking at the final quarter of the year, we find that quarter four's top line of $1.2 billion was roughly flat year over year. The company ran a net loss of $80.9 million. Hmm. Hmm. Caution. Okay. Wall Street is generally showing caution. The shares have 7 recent review, and these break down to 2 buys, 4 holds, and 1 sell for a whole consensus view. Anyway, stagflation is here. Is recession next? Real wages hold the key. No, let's skip on this one. Why war and sanctions are good for Bitcoin. Pumping up oil prices and scrambling Federal Reserve plans to raise rates. Though through it all, Bitcoin has been rising up around 13%, to $39,500 since fighting broke out. The crypto may be benefiting from demand as a currency or store of value in countries hit by war and sanctions. Okay, Bitcoin purchases in Russia and Ukraine have picked up. Not these. Best dividend stocks right now. How to pick the best dividend stocks right now? Given the volatility of the current stock market, wouldn't it be great if you had a steady stream of income that you could count and not depend on the ups and downs of the market? Investing in the best dividend stocks can help. Top dividend stocks can yield a steady income, but they can also beat the market at times. Of course, investors should pay attention to a company's fundamentals and other factors before buying a dividend stock. Look for companies that offer above market yields and solid earnings. Hmm. Cloud stocks have become a heavily in tech. Here are four clear winners. As the world emerges from the pandemic, tech companies have been put in a tough spot. They're under pressure to sustain pandemic era boosts, and many of them have struggled to meet the challenge, including Zoom video communications, Pout Interactive, Shopify, and Chat. But there's one pandemic trend that isn't reversing. Cloud computing is here to stay. Hmm. In fact, the cloud trend is gaining strength. Almost every company in Silicon Valley talks about the power and sustainability of digital transformation. One in 10 chance of nuclear apocalypse, but keep buying shares, says investment firm. A financial research company has raised eyebrows by saying there's a 10% chance of civilization being destroyed in nuclear apocalypse, while urging clients to keep buying shares regardless. Told clients to stay bullish on stocks and largely ignore existential risk, as your investments will become irrelevant if the Ukraine crisis leads to nuclear Armageddon. It puts the chance of civilization destroying nuclear war in the next 12 months at an uncomfortably high 1 in 10. Hmm. As tensions between Russia and the West escalate, Peter Barzin, a chief global strategist at BCA, wrote, despite the risk of nuclear war, it makes sense to stay constructive on stocks over the next 12 months. Hmm. If an ICBM is heading your way, the size and composition of your portfolio becomes irrelevant. Thus, from a purely financial perspective, you should largely ignore existential risk. He concluded, the risk of Armageddon has risen dramatically. Stay bullish on stocks over a 12-month horizon. Has put Russia's nuclear forces, the largest in the world, on high alert, and has argued that NATO's onslaught of financial sanctions are akin to an act of war. Global stock markets tumbled last week as Vladimir Putin doubles down on the invasion of Ukraine. The FTSE 100 suffered its worst week since March 2020, when the pandemic first struck, with the rout wiping more than 130 BN off the UK's blue chip shares. Hmm. Falls again. Hmm. Intel Corporation, Bank of America, Mark & Co. Okay, now let's move on. Wix.com. Mm. Wow, 6% down. It's like it's never gonna. Wow, 73. Here's why Wix.com is stock to watch now. Solid growth over the years. Solid growth over the years. It's riding a tailwind of business going online. Has ingredients to become a long-term success story. The tech sell-off has deepened lately, and some of the best performers from the past 2 years have now become big decliners. As investors adjust to the reopening of the economy and the rising interest rate environment. Okay, while investors should keep an eye on recent developments, right? They should not lose sight of the longer term. Mm. In fact, it would be a mistake for investors to sell off good companies that have solid prospect just because of some short-term noise, right? An up and rising tech company is one of these wrongly written off gems, down 45% so far this year. Top-notch execution track record. Brainchild of three founders who decided to build a platform that simplifies website creation. Their data was to empower anyone to build a website with no coding or design skills, and the idea caught on as Wix quickly reached a million users by 2009, 3 years after its founding. Fast forward to 2022, and the platform now has 222 million registered users. Oh. Wix's impressive success can be attributed to its meticulous execution over the years. It started mainly by offering pre-built websites for customers, but has since evolved to provide a wider range of tools. Wix customers can now build e-commerce stores, manage online payments and business workflows, create professional videos, develop a more sophisticated and customized website, and more. As Wix has grown its suite of products, its financial sales also have skyrocketed, rose from $290 million in 2016 to $1.3 billion in 2021, a compound annual growth rate of 34%. Compound annual growth rate. Compound annual growth rate. Premium subscriptions grew to 6 million, more than double the 2.5 million from 2016. Wix has a proven model to sustain growth. Wix has benefited enormously from the wave of digitalization of small businesses. The good news is that the tailwind is ongoing and should power the company's growth for years to come. Freemium business model, which offers a basic level for free and charges for more advanced features, is well suited to sustain the growth trajectory. The start to website builder can easily acquire new users to its free basic service, and then customers can move up to a level that suits them, including $14 per month for a lower tier package and $39 per month for the VIP website service. Wix has an existing pool of 222 million users, of which only 6 million are paying users. 222 million users. Of which who could only one day become premium users. Conversion usually happens after users get more familiar with Wax's platform or when their needs evolve. While the current conversion rate is only 2.7%, it has improved from the 1.9% conversion rate when Wix went public in 2013. Moreover, Wix could increase the average spending of its premium users as it adds new tools and services. Just last year, Wix launched its point of sale service to help merchants better manage omni-channel sales and also acquired modelists to help merchants better find products to sell online. As long as it can continue to offer value-adding tools, customers will be willing to spend more. Wix is riding on a massive tailwind of small business going digital. If the tech company can continue to attract and delight its customers, it can continue to grow for years to come. We looked into Mercado Libre and Wish.com. And what do we have next? PayPal Holdings. PayPal Holdings. I don't have to hurry. It's just what I need to do is deepen my understanding of companies. There are a lot of companies that I invested my money into, so I don't have to hurry. It's gonna take some time, but PayPal suspends service in Russia. February stocks. PayPal shuts down its service in Russia, citing Ukraine aggression. Its revenue is increasing. Okay, portfolio buying stocks in now market. Tracking and management top tech stocks are down more than Bitcoin, Ethereum. Can it rebound? Large cap tech stocks are trading like cryptocurrency in the short term. All face slowing growth. Face slowing growth. Okay. Valuations are beginning to look attractive. Has a reputation for both explosive growth and cripplingly dangerous volatility. In many ways, the U.S. stock market sell-off has been much more volatile. A play on the war on cash. which has dropped PayPal from the fifth largest US-based financial service company by market cap to not even cracking the top 10. Ultra Deep makes it look more like altcoins such as Solana or Cardano than Bitcoin and Ethereum, let alone a typical large-cap industry-leading business. Young and fast-growing company to a mature and established company with moderate or even low growth. That type change has investors confused about how to price PayPal stock. Although PayPal's growth is slowing, it is positioning consistent earnings and free cash flow, two core fundamentals that make a company worth owning over the long term. Consistent earnings and free cash flow two core fundamentals that make a company worth owning over the long term. In revenue, $1.4 billion in net income. Revenue and net income. Revenue and net income. Revenue and net income. $10.8 billion in revenue. $1.4 billion in net income. In 2016 and 2021, 5 years, it more than doubled revenue to 25. Net income to $4.2 billion. It more than doubled FCF to $5.4 billion. That's a great looking run. The concern is that when we focus in 2021 compared to 2020, it's an ugly chart. Slow down in new account growth and revenue growth of just 15 to 17%. Slower growing company. PayPal Holdings profile. Operates a technological platform that enables digital payments on behalf of digital payments. On behalf of merchants and consumers worldwide, it provides payment solutions under the PayPal Credit, Braintree, Venmo, Zoom, Zelle, Hathaway, the company's payments platform, digital payments platform. All those consumers should send and receive payments in approximately 200 markets and approximately 100 currencies. Withdraw funds to their bank accounts in 56 currencies and holds balances in their PayPal accounts in 25 currencies. PayPal Holdings Inc. was founded in 1998 and is headquartered in San Jose, California. Well-established paper holdings company stocks saw a decent share price growth in the teens level on the Nasdaq over the last few months, with many analysts covering the large cap stock. We may expect any price-sensitive announcements have already been factored into the stock's share price, but what if there is still an opportunity to buy? Today, I will analyze the most recent data on paper holdings outlook and valuations to see if the opportunity still exists. Hmm. Are you a potential investor? Stock's price seems to be justified. I've used the price to earnings ratio in this instance because there's not even visibility to forecast its cash flows. If you'd be buying a relatively reasonable price for it, is there another opportunity to buy low in the future? It seems like the market has already priced in PayPal's positive outlook, with shares trading around industry prime price multiples, however, which we haven't considered today, such as the track record of its management team. Have these factors changed since last time you looked at PayPal? Will you have enough conviction to buy should the price fluctuate below the industry PE ratio? Hmm. Well, stuff like that. Okay, this is it for today. 52 minutes of YouTube. Okay, I'll be seeing you guys tomorrow. Okay, bye bye.